cloud. So anyway, that's chapter 8. So please look at that PowerPoint or that Zoom session, those recordings, and I think it'll give you a really good gist if you need help on chapter 8. Chapter 8 is very important because it's actually a big part of business. You know, when you're, especially if you want to do anything retail, you're going to be buying something at a certain price, and then you're going to be marking it up so that you can make a profit. And there's different ways of marking it up, and there's certainly different ways of figuring out, you know, what kind of percentage of a markup you have, or what kind of percentage of a markup you want. And you know, some businesses run with the idea that we're not going to do anything that we can't mark up 25% at least, or 50%. So those kinds of problems are very relevant to business. And then there's 2 different ways of doing it. There's markup based on cost, and that's because most people buy things at cost and then they mark it up the percentage they want. But sometimes from a retail perspective, you know, we focus on sales and how many sales we made, and then we want to figure out, well, how much, you know, markup do we have based on our sales? And that's another way of looking at it. And so chapter 8 gets into that, and I get into all of that in those videos, those Zoom sessions. Coming to chapter 9, then chapter 9 deals with payroll, and most of it's pretty self-explanatory. In all honesty, it is not difficult for you to do. What's this here? Hold on, it's not allowing me access. Can you guys see my screen by any chance?
Yes.
What are you seeing on my screen right now?
The book, and it says chapter 9 payroll.
Chapter 9 payroll. Okay, perfect. That's what I want to see. Okay. So yeah, chapter 9 deals with payroll, and it gets into some pretty simple stuff at the beginning. You're just figuring out like your paycheck or the hours that you've worked and things like that. And of course, whether your pay is weekly, monthly, semi-monthly, and all that, bi-weekly. So it gets into those kinds of things. I'm not going to go over all that. It gets into hourly versus salary wages and stuff like that. But what I really want to focus on, and also by piecework and then percentages, you know, some people get paid commission, so they might get a base salary, but then they get a commission that's based off a percentage of total sales. So it works through some of those kinds of problems, which are really pretty simple and common sense. Where most students struggle is what's called the calculating their payroll. And by the way, we don't cover everything in chapter 9. We only cover up to what's called the percentage method for payroll taxes. And that's what I kind of want to focus on because it's a little tricky, and students can struggle with this. So that's what I want to focus on in our session today. And trying to find it here. So I might have already passed it out. Let's see. So here we go. So calculating employees' federal income tax withholdings by using the percentage method. And so basically this is going to be predominantly based on whether the person's, whatever withholdings the person has filed. So you guys, if you work, you know that when you get a job, they have you fill out the form that you put how many deductions do you want taken out of your paycheck. And then that is basically what's going to be taken out. So that's your W-4 form. And you're going to fill that out. And so based on that, and then of course, based on whether you're single, whether you get paid weekly, bi-weekly, monthly, etc., it's all calculated how much tax they're going to take out. And the whole goal of taking taxes out of your paycheck, as you all know, is at the end of the year, the government wants their portion. And rather than have you get a big bill at the end of the year, they just take a little bit out of your paycheck with the hopes that they're going to be able to cover all of the taxes that you're going to owe. And a lot of us like the fact that, hey, at the end of the year, I'm willing to pay more into my taxes. So that way, at the end of the year, when they calculate my taxes, they're actually less than what I paid in. So therefore, I get this nice refund at the end of the year. And some people like to do it that way. Other people feel like that's a waste because basically you're giving the government your money to hold on to, and you're not making any money off of that money. So they want to file the least amount of deductions and have the government take out, or excuse me, the most amount of deductions, have the government take out the least amount of taxes every paycheck. And then that way, at the end of the year, they may owe money, but at least they've had that money in their possession for all those months. And so it could be a benefit to you to file many people withholding, so that way you get the least amount of taxes taken out. So basically at the end of the year, however, you're going to have to figure out, or even weekly, you have to figure out, how much tax am I going to pay based on the way that I filled out my W-4 form. So if you see the screen right here, you have two forms that you have to refer to solve these kinds of problems. And so the questions are going to be, Mary made $1,200 in this last paycheck. She's filed for 2 deductions and she gets paid weekly and she is single. And so based off of that information, you have to go to these 2 charts and figure out exactly what her federal income tax is going to be. So the first chart is basically based off of how many withholdings that the person has claimed. So if they claim 1 withholding and they're paid weekly, then in this case, if you look at the chart, they're going to pay $76, as that's going to be taken right off of their total income and it will not be taxed. If they get paid bi-weekly, or they have more than 1 withholding, it would be double that. It would be double that. So if it's weekly and it's 2 withholdings, then they would take 76 plus 76, and that would be their withholding. And so you can look at the chart and realize, okay, how are they paid and how many withholdings do they have? And then you're going to figure out how much you're going to deduct from their weekly paycheck. And I'll show you how to do this in a second, that they will not be paying taxes on. So basically what the withholding represents is the amount of money that you will not be taxed based on your total income that you brought in for that week. But it doesn't just end with your withholding allowance. It also moves into a tax withholding on how much they're going to be taking out. And it's based off of the same criteria. So if you look at table number 1 here, this first part says weekly payroll period. The next part says bi-weekly payroll period. The third part says semi-monthly. So based on how they're paid, and then what is the amount of their income, that's right here, after you've taken out the withholdings, whatever that might be, if it's 1 or 2 or 5, whatever is remaining of their total income that they brought in that week that's left, you go off of this chart to figure out what their additional tax is going to be. So for instance, if she made $1,200 and we deducted 2 withholdings of $76.50 each, she's still going to have made between $753 and $1,762, if you can see my screen. And so that means there's going to be an additional $97.75 that's not taxable, plus 25% of everything over $753. So if she makes $753, so you basically going to take whatever's remaining of that withholdings, and I'm going to show you how to do this in a second. So if you take the $1,200 and then you minus the 2 withholdings, and then you deduct another $97.75, and then you take minus another $753, whatever's remaining, you also get to deduct 25% from. And then once you deduct the 25%, that's considered her taxable income. And so I'll show you how to do this in a second, going through these 2 tables, but that's why it's confusing, because you have to kind of look at these 2 tables to do it. So I'm going to come down here and we're going to look at this.
I'm sorry for interrupting, but
Yes.
Honestly, this part was so confusing in the pre-test. The test we get the first week.
Exactly.
This question was like, which one to pick?
Exactly. So that's why I wanted to spend a little extra time going over it. So let's look at here. You can see my screen. It says example number 11, right?
Yep.
So it says Lori Fast is a manager of Wayward Wind Travel. She's single, is paid $750 a week, and she claims 2 withholding allowances. Using the percentage method, and that's the key to using the tables, calculate the amount of income tax that should be withheld from her paycheck each week. So the first thing you do is you look at table 9.1, which your book might, if you click that, might give you to you, but I'm going to come up here. It's basically this one here. So she gets paid weekly, and she's going to have 2 deductions. So it's going to be $76 times 2. So
times 2 because she has 2 allowances.
So $152, right? You guys see my screen again? So because she's claimed 2 withholdings, she immediately gets to deduct $152 off of the $750 that she got paid, right? So if you look at the line below, 750 minus 152 equals $598. So that's now her new taxable income, but she's not done. Then you need to go to exhibit 9.2, which is table 1 above. So I'm going to go there. And again, we're saying $598 is her new amount. So we're going to come up to that table, and she gets paid weekly, and she's single. So she falls within this second line right here, $218 to $753. So she gets to deduct an additional $1,750 plus 15% of everything above $218. Okay, so we're going to scroll down, and this problem's already worked out for us. So she gets right here, it says find the table. So she's weekly single. So 598 falls in the category of over 218, but not above 753. So her tax is 1,750 plus 15% of everything over $218. So the book wrote it out this way: 1,750 plus 15% of 598 minus 218. So this, if you just do the math, the 598 minus 218 comes out to 380. So it's 1,750 plus 15% of 380. So 15% of 380 is $57. So 1,750 plus $57 comes out to an additional $74.50. So that's going to be her federal income tax. 70.
So she gonna be taxed for just 74?
That's just her federal income tax. Now we're not talking about the other taxes that might be in your paycheck, like Social Security or Medicare, or any of those other things. This is just federal income tax. Now, some of your problems add those additional ones as well, and they'll say, okay, you get a a Medicare tax of 2.5%. Well, then you have to take that off of the total amount, not the taxable amount, the total amount. And I'll show you that. I think there's a problem here that has that in it. So her taxable amount then was $74.50. And again, you have to start with removing those withholdings from her total pay, because you're not going to tax her on the full $1,200 when she has two withholdings. So you got to take that off first. In this case, I'm sorry, $750. So in this case, we took those two withholdings of $152 out of that total amount. So she's only being ultimately taxed on the $598, right? That's the total taxable income. And then we went to that second chart and found, where does that fit within that chart? Well, it fits between the 298 or 218 and the 753. So that means she's taxed $1,750 plus 15% of everything over $218. So we went to the math and wrote that all out, and it came out to $74.50 for her taxes. So we'll go to another one. Here's one that we can try ourselves, right? So $56.70 is her per month payment. She gets paid monthly, and she's married, and she has 5 exemptions. All right. So I'm not gonna be able to work this out for you on the, but I think when I click the answer, it should, hopefully it doesn't just give me the answer. Yeah, it gives me everything. Okay. So before I look at it, let's go up to the top table, right? So she has 5 withholdings.
And she's married.
And she's married, and she gets paid monthly. All right. So let's go up to the top. So we're going to go the first table first. So again, it doesn't really care in this table whether she's married. It just says that she gets paid monthly, right? And she has 5 withholdings. So her withholding amount for one withholding,
this by 5.
So $329.20 times 5.
Yeah.
Okay. Whatever that comes out to. Anybody want to do the math on it? I'm not prepared. Let's look down here and see if it gives us the answer. So $1,646. That's what her withholding came out to. You guys see that? Okay, so you're going to deduct that from her gross pay. So her gross pay was, we said, $56.70 minus $1,646. That gives us this $4,024. That is now her taxable income.
Yeah, the amount she's gonna be taxed for.
So yeah, so we're gonna go up to the table above. So now again, what was she? She was married, and she got paid monthly. So we're gonna come to the next table, and we're gonna go, okay, here's monthly right here, very bottom one. And she's married, so you're gonna use the right chart. And what was it? It was 4,000.
Yeah.
So it's going to be between this 2,217 and the 6,000. So she's going to get taxed then $151.30 plus 15% of everything over 2,217. Let's scroll to the back down to the problem again. So here we are, the exhibit, if you can see that category is that it's going to be between 2217 and 6854. So again, $151.30 plus 15% of every amount above 200 or 2,217. So again, we're going to, the way they drew up the problem makes it easy. They put the 151 plus 15% or 0.15, which is the decimal conversion of 15%. Of 4,024 minus 2,217. So that comes out to 1,807. So again, 151.30 plus 15% of 1,807 equals 151 plus 271.05. So her total taxes were $422.35. So that is her federal income tax for her monthly payroll of $5,670. That makes sense?
Yep.
So that's how you do the percentage method. And by the way, those tables are all you need. You don't really need to do anything other than those tables, even in the world. I mean, if you're going to figure your taxes, those tables are updated every few years. And so you have to use the latest tables, but that's how you would figure the person's federal income tax or yours. Now, your book does get into, and I'm not going to cover it, but it gets actually into the employee side and also the employer side of those taxes. Because I don't know if you realize this or not, but when you are a business owner, you have to pay taxes on
Social Security as well.
You have to pay taxes for you pay taxes as the employee.
Yeah.
But the employer also pays 50% of those taxes as well. So
Social Security and I think Medicare.
exactly, yeah. Oh, sorry.
Like that.
Sorry about that. Gambino, that's who I'm talking to, right? Or Mary. I got Mary and Gambino showing up. So Gambino, am I talking to Gambino right now?
Oh, yes, sorry.
Oh, you got dropped out. Sorry, man. I don't know what happened. I didn't notice until right now that you got dropped out. So
Yeah.
anyway, so I'm not getting into any of this in 9.4. So total withholdings. Oh no, actually, it does get into some of that. So.
So for the Social Security.
Yeah. Uh-oh, you broke up on me.
Yeah.
Say it again.
For this, I was asking a question, but he broke up. So for the Social Security, the employer, I think it's matching the amount.
Yes, yeah, they do. They typically match the same amount that you put in. They have their portion that they have to pay. Yeah. So, but we're not going to figure that. I'm not getting into that in this class because we have too many other topics to cover. So, especially in 8 weeks. So I don't get into that at all. But you're welcome to do that if you want to. But yeah, and I don't get into 9.4 either. So you're not going to need to worry about this table here.
Okay.
9.4. I just do the 9.3 or 9. Sorry, the section we just did 9.6. Sorry, I only do the percentage method. That's it. We don't cover the next one. So everything else in this chapter, you don't need to worry about at all.
Okay.
That makes sense?
Yep.
Yeah. And then the prior questions, since we have a little bit more time here, the prior questions in chapter 9 really kind of deal more with, like I said, figuring out your paycheck amount. So there's a section in here on figuring out your taxes for Social Security and Medicare. And those are, pretty much standard, but you can work through a few of these problems. All you're doing is taking your gross income and then you are multiplying it by the decimal equivalent of those percentages, and that's telling you what your Social Security tax is. So all you're doing is percentages on the total amount. The only little catch with that is sometimes there is a cap to some of these things. There's a cap. So if you make a certain amount of money, you don't have to pay any more tax on it. So just be aware that if it's asking for your total annual income, and then it's giving you your latest paycheck, and your latest paycheck actually causes you to exceed that cap, then you can only be taxed on the amount that's less than the cap. So, if you can see the example here at the top here, it says that the maximum Social Security tax per year is limited to $7,254 or 117,000. So once you've reached the 117,000, you don't have to pay any more taxes for anything over that. So that's probably the only tricky part with some of those earlier questions. But other than that, it's really just figuring out your paycheck. So there's different kinds of pay that you can get. There's, of course, hourly pay. There is, pay plus commission. There's piecework pay, where you get paid per unit that you produce. So all you're asked to do in the questions is to get the amount of the paycheck. So if somebody says, or their gross pay. So if somebody gets a base pay of $5,000 a month, and then they get 10% of every sale that the company makes in that month, and in that month the company made $1 million in sales, and they got 10%, they would make $105,000 at the end of the month, right? So that's the kind of problems that you'll be working on, but they're fairly common sense. And if you have any trouble, I would just recommend that you go to the book and look at the way that they go through it. But for instance, I'll look at this one here just for fun. It's example number, let's see. Well, let me go. Yeah, it's example number 6. Where's the problem? Looking for it. Oh, right here, sorry. So Diamond Industries pays its sales force a commission rate of 6% on all sales. So what is the total gross pay of an employee that sold 113,500? So all you would do in that case is, if they give you a 6% commission, you would just take the 113 times 6, right?
Are they gonna be the salary for him, or the
Yeah,
commission?
so they made gross salary was 6,800, right? And sometimes, however, this is where it gets a little tricky. So look at example 6 right here, calculating incremental commission, right? So for instance, this one here says it pays its sales reps on the following incremental commission scale. So basically, level 1, if you make between 1 and 50,000, that's the amount that they've made, you get 4% commission on up to 50,000, sorry. And then on the next scale, you get paid, if you do over 50,000 to 150,000, you get 5% on that window of money. And then if you're over 150%, you get 6.5% for that amount. So it's not going to be 6.5% for the whole thing. You're going to get 4% for the first 50,000. Then you're going to get another 5% for the next 100,000. And then you're going to get 6.5% for whatever remains, right? So if you look down here, it's going to tell you, you're going to get level 1, 50,000, so on. So this breaks it all down for you. So you're going to have 162. So, over 150,000 is 12,400. So level pay 1 for the first 50,000, you get 4%. So they get $2,000 commission. For the next 100,000, they're going to get, because they did 162,400. They're going to get 5%. So there's 5,000. And then for the last one, they were $12,400 over 150, so they get 6.5% on that amount. And so if you add all 3 levels of pay, their paycheck at the end of the month gross was $7,806. So pretty cool.
Yep.
So that's a graduated commission. And
like the I'm sorry, like the discount chain in the previous chapter. It's working with what left.
Yeah, exactly. So anyway, and then there's other ways that you can do it as well. So sometimes it says companies give sales managers override commissions as a small commission of total sales of the manager's sales force. So in this case, the manager gets 15% of everybody else's amount. Let's see, is that what it's saying? Yeah. So in this case, they get 3%. It says they each receive 15% on their commission. But John, their sales manager, receives 3% override on their total sales. So if Jim sells 20,000 and Diane sells 30,000, then how much does John get, the manager? So Jim got 3,000, Diane got 4,500, so he gets 3% of those two totals.
Get the total, yeah.
Or actually, their total sales right here.
Yeah, total sales.
Yeah. So that's the kind of problems that you'll deal with on chapter 9. And then as far as chapter 18 goes, it's actually the easiest chapter of all. And the only reason I threw it in here is it deals with taxes. And by the way, I don't get into anything but the first two sections on this one. So all it is taking you're figuring out sales tax, which we do all the time, don't we? When we buy something at the
8%.
store, we figure out sales tax, right?
Yep,
There's
8%.
another thing called excise tax, which is a tax paid in addition to sales tax, and it's on items like alcohol and jewelry and things like that, gas, firearms, as it says here. So the only catch there is you don't first remove the sales tax and then tax the rest with excise tax. You always start with the full amount. So if the item was $5,000, then you take your sales tax on it. Then when you go to figure out your excise tax, you also take it off of $5,000. You don't take it off of the discounted amount. That's the only catch on those.
So always work with the main price.
Right. You always work with the main price. Yep.
Okay.
And I don't get into after that. I don't think I mean, it has some sales tax tables here. And every state and county is different, as you know. And so it gets into calculating sales tax, which we do all the time. Again, when we go to restaurants and stuff, we're trying to figure out how much of a tip we should pay. And it's really kind of the same thing. And then excise tax comes to the same thing. And then that's it. That's the only section I believe I cover in chapter 18. So you don't have to do any of the rest. So there'll just be a few problems on all of that in chapter 18. So, does that make sense?
Yep.
Okay. Do you guys have any questions about anything else in relationship to the class that you'd like to ask?
Oh, thank you.
Yeah. I really want you to learn the percentage method. So that's why I wanted to at least talk about that. Because I feel like that's